Good morning. It is just after 9 UTC. What is it? On September 11th, Wednesday. First thing we'll talk about is the CPI data that's coming out today. This is going to be one of the key factors, I think, between this and the PPI tomorrow. This is the number one thing to look at. We want to see lower than forecasted CPI data showing that inflation's reducing. That would just further kind of embolden the Federal Reserve to lower interest rates as they're expected to do on the 18th. So in about actually exactly 1 week from today. So keep an eye on that today. That is an hour before the U.S. New York Stock Exchange opens. So expect some volatility coming from that. So hopefully we'll get lower than expected, or as expected or lower. If it's higher than expected, it starts to kind of look the opposite direction, actually. So higher than expected is bad. Then it's going to be basically looking at on the 18th, we might actually not reduce rates as much. I still think they're going to reduce rates regardless, but we'll hope for lower than expected. So then tomorrow, again, like I said, an hour and 15 minutes for the New York Open, the ECB interest rate decision, which is forecast to drastically lower interest rates. And then the big one, an hour before the open, initial jobless claims and PPI. So expect that to be, pretty volatile today and tomorrow based off those factors. Looking at Bitcoin and the local structure, yeah, we had a nice little downside move. We actually broke some trend to the upside. This little downside move, we've lost now 56.5. Technically, it's downside priority. We want to see a regain, a pretty clear one, regain at 57K, which would allow us to target above 58 for that short liquidity that's building higher. But for right now, we do have some local lower time frame downside priority. And with some bearish retesting stuff, we definitely don't want to continue breaking down. Looking a bit higher time frame as far as the liquidations go. Yeah, we've got a nice little stack here building up to come back down and retest 55.5. There's the weekly open down here as well. We don't want to lose the weekly. If we lose the weekly, we're actually looking kind of similar to what we did back on, I believe, the 2nd of July. Anyways, I'll go through that and show you what I mean fractal-wise. It looks very, very similar, so hopefully we don't get any localized failures that start to break that kind of upside momentum we have currently. Looking at the long-short ratios, one downside that we are seeing, obviously, as of this morning, is that because we had a little bit of a breakdown early this morning, we're actually seeing people stepping back in an attempt to long this local low. So that's kind of like the negative thing for upside continuation. So if people are trying to long the local low, it doesn't necessarily mean we're going to break back down. However, it does start to incentivize the grabbing of that further long liquidity below us. As far as the funding rates go, across the board, it's majority negative. However, big ones I look at, like BitMEX, that's back to positive funding rates. It's really heavily incentivizing shorts because of that breakdown. So keep an eye on that. That's going to be a big one. Looking at the charts themselves, yeah, trading light, we're seeing still quite a bit of plunge protection stepping into hold stuff. Not super keen on the local holds here. We've got some downside pressure as well. So our books are getting stacked again in the longs, which is good. I would say the more organic stuff is down at 55K. This seems more realistic than what we have above us. But either way, like I said, we have lost some local structure. And how do we invalidate that? Really quickly do a regain of 57K to start targeting back to the upside. Also, with that down move we saw early this morning, we saw a pretty powerful liquidation of localized longs, people longing basically the continuation gain. That's where we kind of saw that flip on the long short ratio as well. So people trying to long the local regain, forced liquidations, and now we've broken some of that upside trend. It's when we start losing 55K, stuff starts to break. So hopefully if we do a retest, it'll be a quick little tap before we actually have a continuation. Other than that, open interest is generally unchanged in this area. Just look at TPO. We are losing locally, so this is something I keep an eye on. And like I said, 57K, 56.9, this is the local level to regain. That would put local shorts out of position and could see a continuation drive higher. Until then, we've broken some local stuff and we're trending down on low time frames. But from the lows that we put in back on the 6th, it still looks pretty decent. We don't want to start losing that block. If we start losing this block here, then we start playing out a previous fractal for potentially continuation downside. So it's tentatively up. We just, again, want to regain the levels that we've lost that led us to the local lows, and we don't want to continue losing the levels that we are currently doing. But overall, still, we've got some priority up, and it still looks pretty decent until we start losing some more key levels. Looking at the footprint as well, I'll go on the 4 hour, but actually I'll say on the 1 hour, that's fine. this is the kind of like the imbalances that I'm looking at as a potential retest. So these, imbalance in market orders is where we'd like to see a retest locally. If we get a regain, like I said, 56.9, 57K, likely to get a retest back to the upside, but there's some pretty decent imbalanced books here. It's when we start breaking back below that and breaking, this cluster is when we actually start breaking structure back down, and we could potentially be talking about new lows. Just to look at where local orders are positioned. So from yesterday to today, we actually have quite a bit of pain against these late longs who were longing in the last 24 hours or so. Actually, a little bit longer, 36 hours. The big thing here that sticks out is, who's getting punished and where. So this downside move from, the major longs around 56.8, 56.9, that they've all been significantly punished, I would argue, 1.4%. So that's good. We've punished a lot of the significant local longs, allowing the older stuff to stay in place. We do also have a pretty decent amount of shorts that are potentially out of position below us. And like I said, really quick regains, 56.9, even here on the 4-hour 56.8, but I would rather see 56.9. That's going to be a potential reversal back to the upside. So wait for these closes and failures underneath, like say 56.5. If we have a low close under that level, then on the 4-hour especially, it definitely leads to priority down overall. Finally, looking over at the TradingView chart for general direction. So from yesterday, not a whole lot has changed. However, I will say we did break a little bit. That localized retest at 56.5, we kind of failed some local stuff. I'd love to see a regain to get us back above 57K. That's the regain that starts to okay, maintain priority, start grabbing that massive amount of short liquidity above us. That could easily lead us back towards 60K plus if we can get over 59.5 in some of these heavy supply zones where people are offloading. If we have that continuation failure, we're definitely coming right back down to 55.6. I think that's the easy one. The continuation loss here must force a weekly open retest down to about 54.8. If we lose this, we do start to break stuff. So that's my danger point. Kind of like if we lose that, it starts to look like the price action from July 2nd. What does the price action from July 2nd look like? Well, let's just look back in time a little bit. And here, so similarly, we had a really strong downside move, had some grindy upside, and then we got into this kind of price action that led to a local high, started seeing some local failures, retest, and then finally when we started breaking down and losing this cluster, we just nuked it through. And at that point, people started trying to long, which led to a catastrophic continuation down move. So keep an eye on this really significantly. And what does this look like here? I'll just reset it and go back to the local chart. I mean, there you go. So we can invalidate that fractal really simply by doing a regain back at 57K, bullish back testing the previous weekly open and having that continuation. But if we do start failing it, we do start to look at this structure here, that failure of the weekly open, likely to start giving us that kind of downside move again, and it would lose local priority up, like really significant priority up. So keep an eye on that. Until then, tentatively up still. We've had a really significant bounce. We've gained one range. We're back trading nearer 60K than we have been since the end of last week. So overall, still generally uppish trending until we lose that. Make sure you're setting your conditional alerts based off of your levels. Really simple, take a horizontal line, right? This is like the easy mode of like trading. You put a horizontal line there, you right click on it, add an alert to it, and create. Tell me when it's happening, if we're breaking the weekly open. That's kind of like the key zone, I think, to hold this entire structure. So that's that. Take it easy and catch you tomorrow.